Good afternoon, everyone, and welcome. Thank you for joining today's training on understanding SNAP and temporary assistance benefits. For those of you who do not know me, my name is Denise Luzak, and I'm a mental health program specialist here with the New York Employment Services System, or NYESS. So I'm glad you're all here, and I hope you find today's training informative and useful as you're in your role as work incentive practitioners. And then as well, I'll also add, because of the internal issues that we're experiencing with WebEx, I'm not able to mute anyone. So I just wanted to just make a statement before I begin. If anyone who's not on mute can just go ahead and unmute them and mute themselves so there's not any of the background noise. And then again, if there are any questions that maybe you're putting in the chat and I don't see, go ahead and unmute yourself and I can stop to answer that question. Okay. Okay, what we'll cover today. We're going to cover SNAP program overview. We'll move into SNAP eligibility, some SNAP deductions, some additional supports such as HEAP, SNAP reporting and recertification, temporary assistance for needy families, TANF, temporary assistance work requirements, temporary assistance case examples we'll go through, also the emergency assistance and appeals. And then at the end, we'll have time for any additional questions, and I'll provide you guys with the resources used in this PowerPoint slide. And as well, after today's presentation, I will send the PowerPoint that is used today. Okay. All right. I'm just hearing some background noise. If somebody, or if you guys just want to go and check to see who needs to mute, I'd appreciate it. Thank you. Okay, today's objectives. After completing this training, participants will be able to describe the basic eligibility rules and work requirements for New York SNAP and temporary assistance, identify common income, resource, and deduction rules that may affect benefit eligibility and benefit amounts. And then lastly, apply SNAP and TANF rules to case examples to understand how employment may affect benefits. Okay, so now that we've reviewed today's agenda and objectives, let's begin by talking about the Supplemental Nutrition Assistance Program, or SNAP. In this section, we're going to review how the program works, who may be eligible, how household rules and income are determined, and how employment can affect SNAP benefits. We'll also review the basics that can better help individuals as they make decisions about work and benefits. Okay, and then just one more thing before I go to the next slide. I am unable to utilize my mute participant function. If you guys just want to take a look to see if you need to mute yourself, just to avoid any of the background noise. Okay. SNAP helps eligible individuals and families with limited income purchase food. Benefits are provided through an EBT card, which can be used to purchase eligible food items. In New York State, SNAP is overseen by OTDA, which is the Office of Temporary and Disability Assistance, and it's administered locally by the Departments of Social Services. And as benefits advisors, understanding the basics of SNAP helps us be able to explain how changes in income, employment, and household circumstances may affect benefits. Okay, So who is eligible in the SNAP household is important because SNAP eligibility and benefit amounts are determined for the household. In general, people who live together and purchase and prepare their food together are considered one SNAP household. Someone who lives with others but purchases and prepares food separately may be considered a separate household. However, there are some situations where people must be included in the same SNAP household, even if they purchase and prepare their food separately. We'll take a look at those rules next. Okay, although SNAP generally looks at who buys and prepares food together, there are some people who must be included in the same SNAP household. Spouses who live together must be included together. As well, children under 22 who live with a parent must also be included in that with that parent, even if they are purchasing and preparing their food separately. In addition, a child under the age 18 who lives with and is under the parental control of an adult household member is generally included in that household. And foster children may be treated differently, so their circumstances should be reviewed individually. Okay, so not everyone who lives in the same home is necessarily part of the same SNAP household. For example, a roomer who pays only for lodging or a live-in attendant may not be included. People who live together but usually purchase and prepare their food separately may also be able to have separate SNAP households. However, the required household member rules we just discussed still apply. So benefits advisors should ask about both living arrangements and how the food is prepared when helping someone understand their household composition. Okay. Foster children are treated differently under SNAP household rules. The household can choose whether to include a foster child as a member of the SNAP household. And if the child is included, the foster care payments and other countable income associated with the child are considered when determining SNAP eligibility and benefits. If the household should choose not to include the foster child, the child is treated as a boarder for SNAP purposes. The foster child cannot participate in a separate SNAP household from their foster family. Okay, SNAP has special household rules for certain individuals age 60 or older who have a permanent disability. Normally, people who live together and prepare food together are considered one SNAP household. However, an individual age 60 or older who is unable to purchase and prepare meals separately because maybe a permanent disability, they could be treated as a separate SNAP household. That disability must meet the applicable verification requirements, and the income of other people living in the home must meet the 165% of the federal poverty level limit. And the spouse is treated differently under the income test. This exception allows an eligible older adult with a disability to be considered separately, even though they are living with others. Okay, so now if you just take a moment to decide which example right here on the slide would not be considered a single SNAP household. And think about the household rules that we just discussed, including the rules for children under the age 22 and live-in attendants. So I'll give you guys a moment to read through this. Or I could read it for you. We have a mother and her 20-year-old son who live together but buy meals and prepare meals separately. Option B, two unrelated roommates who buy and prepare meals together. And then option C, a person with a disability and a live-in attendant who provides care. Before I move on to the slide that gives the correct answer of which of the following is not considered a single SNAP household, does anybody want to unmute themselves and share their answer? Okay, I'm not seeing anyone. So again, I'll move on to the next slide.
C?
Oh, yep. Yes, it is. Thank you. Sorry. It's hard for me to see the chat or the attendant panel right now. Yes, thank you.
We can simplify. That's what I'm definitely agreeing with you. Like we focus.
Yeah, Denise, in the chat, we have a lot of folks who said A. We have some folks who said C.
Okay.
So we have just a couple different answers.
Thank you. And thank you guys for participating. So here, the correct answer why it's C. A live-in attendant who lives in the home to provide care is not considered part of the SNAP household. And then in option A, the 20-year-old must be included with their parent because they are under age 22. So that's why that A isn't the correct answer. And then for B, the roommates who are one SNAP household because they purchase and prepare food together. So again, the correct answer is C, because the live-in attendant who lives in the home to provide care is not considered part of that SNAP household. Okay, and then Jennifer, do you see anyone asking any more questions about this before I move on? I just don't want to miss anyone.
Nope, just a nice thank you.
All right.
I did it? No.
Oh, I'm having. Oops, and I don't know if that's someone who's adding a comment. I'm just, I couldn't hear you very well.
I'm not seeing any additional.
Okay, maybe it might have just been some background noise I picked up on. Okay. All right. So now that we've looked at who is included in a SNAP household, we'll move into SNAP eligibility. We're going to review the basic eligibility requirements and how factors such as household size, income, resources, and work requirements may affect eligibility. Okay, to qualify for SNAP, a household must meet certain eligibility requirements. These can include income limits, meet citizenship or eligible immigration status, residency, and applicable work requirements. Applicants may also need to provide documents to verify information such as identity, income, household composition, and expenses. And we'll look more closely at the income rules in the next few slides. Okay. SNAP considers both gross and net income when determining eligibility. Gross income is the income before allowable deductions, while net income is what remains after allowable deductions are applied. These deductions can make an important difference in eligibility and benefit amounts. Income limits vary based on household size and circumstances. So benefit advisors should always refer to the current OTDA guidelines. Okay, so New York State uses broad-based categorical eligibility, or BBCE, which changes how certain SNAP households are evaluated. The applicable gross income level depends on the household circumstances. So for example, households with earned income may qualify for categorical eligibility up to 150% of the federal poverty level, while households with dependent care expenses or older adults or disabled members may qualify up to 200% of the federal poverty level. And because different rules apply to different households, benefits advisors should use the current OTDA guidelines when reviewing SNAP eligibility. Okay, when determining SNAP eligibility and benefit amounts, income is generally categorized as earned or unearned income. Earned income includes things such as wages, salaries, and net self-employment income. SNAP typically allows a 20% deduction from earned income when calculating the net income. And then we have unearned income, which may include things such as Social Security benefits, SSI, unemployment insurance, pensions, and other countable income. So it's important to remember that some types of income are excluded from SNAP. And we'll look at some common examples next. Not all money a household receives is counted as income for SNAP. Some payments are excluded under SNAP rules. Examples may include certain non-recurring lump sum payments, student financial aid, loans, reimbursement, energy assistance, earned income tax credit payments, and certain in-kind assistance. Some lump sum payments may be treated as a resource rather than income. And because the treatment of income can depend on the type of payment and the household's circumstances, benefits advisors should refer individuals to their local SNAP office for an official determination. Okay, SNAP has work requirements that may apply to certain individuals. Able-bodied adults without dependents, which is often called ABODs, may have additional requirements. So generally an ABOD who is subject to the rules must work or participate in qualifying activities for at least 80 hours per month to continue receiving SNAP beyond the time limit. However, there are several exemptions, so the rules will depend on, again, the individual's circumstances. Beginning March 1st, 2026 of this year, ABOD work requirements apply statewide in New York. An ABOD is generally an individual age 18 through 64 who is eligible to work and does not live with a child under age 14. ABODs are generally limited to 3 months of SNAP benefits in a 3-year time period, unless they meet work requirements or qualify for an exemption. The requirements may be met through work, earnings, approved employment or training activities, or certain qualifying volunteer work, community services, or in-kind work. So next we'll look at some of the exemptions from the ABOD's requirements. So not everyone who receives SNAP has to meet the ABOD work requirements. For example, individuals may be exempt if they are under age 18 or age 65 or older, live with a child under age 14, receive certain disability benefits, are pregnant, have a health condition that limits their ability to work, or care for an incapacitated person. And there are additional exemptions. So benefit advisors should refer individuals to their local Department of Social Services for an official determination. Okay, I'm just going to pause for a moment before we move into our next section to see if there's any questions, comments, anything anyone would like to add. And then I'm going to ask my colleague Jennifer if you could help me out and see if anyone is putting anything in the chat, please.
Yes, there is one individual who I am trying to troubleshoot some technology issues with
Oh, okay.
without not being able to see the slide. So I don't know if anyone else is having any difficulty seeing the slides. I'm not seeing that anywhere else in the chat.
Okay.
There is.
I was going to
Go ahead.
I was going to say maybe for the participant having trouble seeing the slides, if you want to sign out and then sign back in, maybe if that, I don't know.
Providers actually do.
We do have some additional comments in the chat if you'd like me
Sure.
to go ahead and do that.
Yes,
All right.
please. Thank you.
Okay. What about hopping other words, not complying and then reapplying once you comply and then not complying with the work rules again and doing it again?
Some ways it might.
So I'm not really 100% sure. Would you feel comfortable, Tasha, unmuting and clarifying that question?
And before Tasha goes ahead and unmutes, I just wanted to say, I was having trouble hearing just because there's quite a bit of background noise. I don't know if it's just coming like from feedback from me, but if everyone just can take a moment just to make sure they're on mute so we can hear Tasha's question. I appreciate it. Thank you.
Okay. Yeah. What I mean about like hopping back and forth, I notice that some people like right now, they, apply for SNAP or whatever, and after the 3 months, I'm not complying, and they get cut off. And then when they find out they're cut off, then they go back and they reapply, and then, they comply in some form or manner. And then once they, comply for a while, then they stop complying, and then they kind of hang on for a bit, and then they go back and reapply. And I'm just wondering, is it going to be a back and forth kind of thing?
So, like I think NYSS, one of the things that they did was they actually.
Okay. So, Tasha, in regards to the back and forth, I'm not sure the best way to really answer that question, or if it's just kind of like a general issue that may be going on. But I would think that that would be something the SNAP office would be, maybe able to look at more closely, or something that very well could be flagged on their side. And I'm sure with this being fairly new with these work requirements, I would assume that they're experiencing a lot of kinks that they are still trying to work out. And then please, if anybody else on this WebEx has any information that they can provide, or maybe something that they don't know, or that they know that we're unfamiliar with, please go ahead and share. I'd appreciate it.
Pretty difficult.
While we're waiting, do you mind if I read out another question in the chat?
Oh, absolutely. Go ahead. Thank you.
There was another question that asked about, are people receiving SSI automatically exempt?
Are people receiving SSI automatically exempt?
Mm-hmm.
So there was that. It did say for an exemption. Let me go back and look if it was on this slide, but that is one of the exemptions that were listed, recipients of SSI. were exempt from the SNAP work requirements.
I guess I see.
I'm not seeing any other.
And then there is, I do have the link to that full list, because there are many exemptions. And I did not include them all, but is a complete list of at the otada.ny.gov that'll give you, and you'll be able to find out all exemptions. And then again, if there's any questions with an exemption, reach out to the local Department of Social Services. Okay, is there anything else before I move on? And then certainly any questions that I'm unable to give a definitive answer on, I will certainly look into it and reach out to my resources, and I can get back to you through email or phone call. Okay, so if there's not anything else, I'm going to move along. And then if you guys think of something else, please, we can revisit it at the end too. Okay, so now we're going to look at SNAP deductions. Deductions reduce the amount of income counted when determining SNAP eligibility and benefit amounts. We're going to review some of the most common deductions, including earned income, dependent care, medical, and shelter-related deductions. These deductions can make an important difference in both eligibility and the amount of SNAP benefits a household may receive. Okay, so SNAP has special rules for self-employment income. Generally, allowable business expenses are deducted from gross self-employment income. And then the remaining income is used in the SNAP budget. Self-employment income may be averaged over a period of time. Seasonal work or significant changes in income may be handled differently. And because self-employment calculations can vary, benefits advisors should refer individuals, again, to their local Department of Social Services for an official determination. Households with a member who is age 60 or older or who has a disability may qualify for the SNAP medical expense deduction. Allowable medical expenses for eligible household members are combined, and only the portion that exceeds $35 per month is deducted. Examples may include insurance premiums, Medicare costs, transportation to medical appointments, in-home care, service animal expenses, and then items such as hearing aids, dentures, eyeglasses, and prosthetics. And these deductions reduce countable income that can increase the household SNAP benefit. Okay, a plan to achieve self-support or PASS is a work incentive available through SSI. And when an individual has an improved PASS, the expenses set aside under the plan are deducted from income for SNAP purposes. This can help reduce countable income, as well as it may allow individuals to keep a higher SNAP benefit while working towards an employment goal. Okay, and then we have SNAP allows a deduction for dependent care expenses when the care is necessary for a household member to either work, accept employment, participate in training, or attend school to prepare for employment. The care can be for a child under age 18 or for a household member with a disability, regardless of their age. And unlike in the past, there's no limit on the amount of allowable dependent care expenses that can be deducted. Households may receive a deduction for legally required child support payments. And to qualify for the deduction, the household member must actually make the payments. This deduction reduces countable income and may increase the household's SNAP benefit. Okay, SNAP includes a standard homeless shelter deduction for households experiencing homelessness that have or even expect to have shelter expenses. Instead of calculating the shelter cost, a standard monthly deduction of $198.99 can be applied if the household qualifies. Most of the time, documentation of shelter expenses is not required unless the information provided is questionable. This deduction can help increase the household's SNAP benefit by identifying shelter-related expenses. Some households may qualify for an excess shelter deduction if their shelter costs are high in comparison to their income. To qualify, the household's shelter expenses must be more than 50% of their income after certain SNAP deductions have been applied. Most households receive a maximum deduction of $744 per month. But if the household includes a person with a disability or someone who is age 60 or older, there's no maximum limit on the deduction. Okay, so we have a deduction exercise. So which of the following is not a deduction from income for SNAP? We have A, past expenses, B, legally required child support payments, and then we have C, medical expenses of a non-disabled 30-year-old. So I'll give you guys a second to, or if you want to just put the answer in chat, or if anyone wants to unmute. And then Jennifer, if you don't mind just sharing with me as answers are coming in, and then we can look at the next slide in a minute for the answer.
I won't say anything, but I have an answer, but I won't say it yet.
Okay.
Yes, we're getting quite a few in the chat so far. It looks like most people responding are saying C.
Okay.
They did get a lot of peers.
All right. So the majority of the answers are C. Let's move to the next slide and see what we got. Okay, yep. So the correct answer is C, medical expenses of a non-disabled 30-year-old, because medical expense deductions are usually only available when a household member is age 60 or older or has a disability. And then just to add to that, for past expenses, they may be deducted when an individual has an approved pass, and legally required child support payments that are actually paid may also be deducted when determining SNAP eligibility and benefits. Okay. All right, so we have another exercise. This is an income exercise. And it's asking which of the following kinds of income will not reduce SNAP benefits? Is it A, SSI, B, a $100 contribution from a nonprofit agency, or is it C, self-employment earnings? Again, I'll give you guys time to put your answers in chat so we can see what the majority is saying. Okay. What are we all thinking for the
Jones or Veld, we talked about that.
correct
We have
answer?
we have a resounding B.
Okay.
Quality of life.
That is correct. The answer is B. And then, but here's why. SNAP does not count infrequent or non-reoccurring gifts or contributions as income when determining benefits. And a one-time $100 payment from a nonprofit would generally be considered an excluded non-countable gift. Okay. All right. Before we move on to the next section, are there any questions or comments before we move on? Okay. Again, if anything comes up, we can go through it at the end and I can stay on. All right. So now that we've reviewed SNAP deductions, let's take a look at another program that can help eligible households with their expenses. The Home Energy Assistance Program, or HEAP, helps eligible households with home energy costs. And although HEAP is a separate program from SNAP, many individuals receiving SNAP may also benefit from HEAP. HEAP helps eligible households pay for heating costs, which makes it an important support program for people with limited income. And while HEAP is a separate program from SNAP and temporary assistance, many households receiving those benefits may also qualify for HEAP. And eligibility is based on the household circumstances, and eligible households may receive one regular HEAP benefit each program year. And as benefits advisors, it's always a good idea to consider whether someone receiving SNAP or temporary assistance may also be eligible for the HEAP program. Okay, so HEAP eligibility can be met in several ways. Some households qualify because they meet the program's income guidelines, while others may qualify because they are already receiving SNAP, temporary assistance, or Code A, which is SSI for individuals living alone. Households may also need to meet citizenship or eligible immigration requirements to become eligible. And because eligibility can vary based on an individual's circumstances, it's important, again, to have individuals contact their local Department of Social Services or HEAP office for eligibility of benefits. As benefits advisors, it's important to look at an individual's overall situation and not just one benefit program. So when helping someone apply or recertify for SNAP, consider whether they may also qualify for HEAP and whether they're receiving all allowable SNAP deductions. As well, encourage individuals to report all allowable expenses and keep their supporting documentation, as well as work with their local Department of Social Services for an official eligibility and benefit determination. Okay, so now that we've reviewed HEAP and how it can provide additional support, let's go back to SNAP, and we'll discuss what households need to do after they're approved, as well as reporting changes and completing the recertification process. Okay, so most SNAP households in New York follow what's called simplified reporting rules. And this means that they do not need to report every change right away. Most changes are only reported at the periodic report or recertification. But there are some important changes that must be reported within 10 days after the end of the month. These changes include when a household's gross monthly income goes above the 130% of the federal poverty level, and when somebody is subject to the ABWAD work rules. ABWAD work rules works or participates in activities for less than 80 hours in 1 month. Okay. Some SNAP households are required to complete a periodic report during their certification period. And this is a form that looks to see if anything has changed in the household. Households can use the form to report changes that may affect their SNAP benefits. And this may include earned income going up or down by more than $125 per month, changes who lives in the household, or other changes listed on the form. The periodic report must be completed and returned within 10 days of receiving it. And if the form asks for proof of any of the reported information, the household should include that documentation when they're returning the form. And then just as a reminder, the $125 rule only applies when filling out the periodic report. It does not mean that every $125 change must be reported right away. Okay, recertification. SNAP households must complete the recertification process to continue receiving benefits. About 2 months before the benefits, and the household will receive a recertification packet that includes a SNAP application and the information about a scheduled interview. There are 3 main steps for the recert process. First, the application must be submitted before the scheduled interview. Second, the household must complete an interview with their local Department of Social Services. And third, additional documentation may be requested to verify income, expenses, or other household circumstances. And applications can be submitted online or through mail, fax, or any person's local Department of Social Services, or access HRA for those who live in New York City. And then I do have included the link on there on the bottom of this slide for the fastest way to recertify applications online through mybenefits.ny.gov, as well as the link for Access HR for those who live in New York City. Okay. After a SNAP application is submitted, a local Department of Social Services reviews the information to determine eligibility. DSS may contact the applicant if additional documentation or any clarification is needed to complete the determination. There are some situations where an authorized representative may complete the application on behalf of the applicant. This may be, for example, if the individual has a disability or is experiencing a hardship that prevents them from completing the process themselves. And once the household is eligible, SNAP benefits are generally issued within 30 days from the date the application was received. Some households may qualify for expedited SNAP, which allows eligible households to receive benefits quicker than through the regular application process. And a household may qualify if they meet certain criteria, such as having very low income and limited resources, being a migrant or seasonal farm worker with little or no income at the time of application, or having shelter costs that are higher than their available income or resources. And the local Department of Social Services will review the application to determine whether the household qualifies for expedited SNAP. Okay, so the New York SNAP calculator is a tool that helps estimate how earned and unearned income may affect a household's SNAP benefits. It is only an estimate and does not determine eligibility or benefit amounts. The local Department of Social Services makes the official decision based on the information provided in the application or the recertification process. And then I have included the SNAP calculator in this slide. So if anyone wishes to use it, they'll have that available. Okay. Are there any questions or anything we need to discuss before we move on to our next section, which is temporary assistance for needy families, or known as TANF? Okay, I'm going to move on. Okay, so in this section, we'll discuss New York's temporary assistance program, who may qualify, and how it provides cash assistance and other supports to eligible individuals and families while they work towards greater financial independence. Temporary assistance in New York is designed to provide short-term financial support for individuals and families in need. To qualify for temporary assistance, individuals must meet basic eligibility requirements, such as citizenship or eligible immigration status, live in New York State, and provide a social security number or proof of the application for one. Households must also meet income and resource limits, in addition to complying with DSS program requirements. The temporary assistance filing unit determines whose income and resources are considered when evaluating eligibility. It typically includes parents, eligible children, and minor siblings living in the household. Other individuals such as caretaker relatives, step-parents, or other household members may also be included depending on the household situation and program rules. The standard of need. This is the amount New York State uses to determine whether a household has financial need. There's several factors that are considered, such as a statewide monthly standard of need, rent allowance, energy allowances, or other relevant temporary assistance allowances. As part of the temporary assistance application process, some applicants may be required to cooperate with child support enforcement. This may include helping to identify a non-custodial parent and establish or obtain child support. However, there are exceptions when cooperation with child support enforcement may not be appropriate. Those may be such as when there are safety concerns or certain circumstances involving rape, incest, or adoption proceedings. And in some cases, applicants may be required to apply for SSI and follow through with the appeal process if DSS requests. Okay, so temporary assistance programs. New York has two main temporary assistance programs. They are family assistance and safety net assistance. Family assistance, that program is federally funded and serves families with dependent children. Family assistance is designed for households with children. A qualifying child may be unborn or under the age of 18. In some cases, a child may qualify up to age 19 if they are still attending high school or an equivalent full-time educational program. Family assistance is funded through the federal TANF program, and it has a lifetime limit of 60 months for most adults. Once an adult reaches the 60-month limit, the household may still be eligible for assistance, but cash benefits at this time are usually not paid directly to the household unless an exemption applies. Payments typically then get made directly to vendors, such as landlords, any utility companies that are needed to help meet the household's basic needs. So some households may qualify for an exemption from the 60-month family assistance limit. Examples of this may include individuals with long-term disabilities, individuals receiving SSI or a state SSI supplement, certain survivors of domestic violence, and caregivers of household members with disabilities. And for two-parent households, both parents must meet the exemption requirements. Okay, and the other temporary assistance program is safety net assistance. This program is state and locally funded, and it serves individuals or families who do not qualify for the family assistance program. Safety net assistance is available to individuals and households who are not eligible for family assistance. This may include single adults, individuals under age 18 who are not living with an appropriate adult, and certain households that would otherwise qualify for family assistance but are not eligible because of the specific program rules. Safety net assistance may also be available to individuals who have reached that 60-month federal time limit for family assistance, but they continue to meet other eligibility requirements. And some people living in a household aren't counted when determining whether a family qualifies for temporary assistance or how much assistance they can receive. For example, individuals who receive SSI are not included in the temporary assistance household. That means their income and resources are not considered when figuring out eligibility or benefit amounts. There are also other situations where someone may not be included in the household for program reasons. That could be such as certain penalties or immigration-related rules. Most types of income are counted when determining eligibility for family assistance or safety net assistance. This includes both earned income, like wages from a job, and unearned income, such as Social Security benefits or unemployment payments. In some cases, the income of a step parent who is not applying for benefits may also be counted when determining eligibility. However, there are several important income exclusions, and this means certain types of income are not counted, which can help reduce the total amount of income used when deciding eligibility or benefit levels. Some types of income are not counted when determining temporary assistance eligibility. Examples of these may include SSI benefits received by a household member, certain student earnings, and some Workforce Innovation and Opportunity Act, WIOA, income received by dependent children. Other examples may include certain child care allowances, some payments made through OPWDD programs, certain in-kind benefits, and AmeriCorps Vista living allowances. These exclusions are important because they can reduce the amount of income that is considered when determining eligibility and benefit amounts. Some additional income exclusions may apply depending on the household's circumstances. For example, certain child support payments, loans, educational assistance, foster care parent payments, family sufficiency escrow funds, and proceeds from reverse mortgages may not be counted. And because these exclusions can vary based on the situation, a local Department of Social Services will determine what income is counted when reviewing eligibility. Okay, temporary assistance has resource limits. And that amount depends on whether the household is applying for benefits or are already receiving them. For households applying for family assistance or safety net assistance, the resource limit is typically $2,500. If someone in the household is age 60 or older or has a disability, that limit increases to $3,750. And once a household is receiving temporary assistance, the allowable resource limit increases to $10,000. And it's important to remember that the resource limit can be different during the application process than it is once the household is receiving benefits. Okay, before we look at the resource limits, it's important to understand what we mean by resources. So temporary assistance looks at both income and resources when determining eligibility. Resources are typically financial assets that a household has available or could be made available to help meet basic needs. Examples of this may include cash, checking and savings accounts, pensions, and certain real or personal property. And not every resource is counted. So the local Department of Social Services will determine which resources are considered when reviewing eligibility. Again, not all resources are counted when determining temporary assistance eligibility. Some resources are excluded, meaning they do not count towards the household's resource limit. Examples include a person's primary residence, a portion of the value of one vehicle, certain tax refunds, basic household items, and ABLE accounts. Other exclusions may also apply depending on the household's circumstances. So it's important to remember that having a resource does not automatically make someone ineligible for temporary assistance. DSS will determine which resources are countable and which can be excluded. In addition to the basic temporary assistance benefit, some households may qualify for additional assistance to help with specific needs. These may include certain housing-related expenses, childcare, pregnancy-related expenses, meal preparation needs, or other necessary expenses that I have listed on this slide. Not every household will qualify for these additional allowances. Eligibility depends on the household's individual circumstances and the specific program requirements. As benefits advisors, it's helpful to be aware of these additional that their additional allowances exist, and encourage individuals to discuss their specific needs with their local Department of Social Services. Okay, so now let's review temporary assistance work requirements. Most individuals receiving temporary assistance are expected to participate in work or approved work activities unless they qualify for an exemption. In this section, we're going to discuss who is required to participate, some common exemptions, and the work participation requirements. So most temporary assistance recipients are expected to participate in work activities, but there are some exceptions. For example, an individual may be exempt because of a disability or short-term illness or injury, certain student status, pregnancy, or because they are caring for a young child or a household member with a disability. These exemptions recognize that there are circumstances when participating in work activities may not be appropriate. And again, a local DSS will be able to determine whether an individual meets an exemption. The number of hours someone is required to participate in work activities can vary depending on their household situation. For example, a single parent with a child under age 6 generally has a 20-hour per week requirement. Most other single parents or caretaker relatives generally have a 30-hour per week requirement. For two-parent households, the requirement is generally 35 hours per week combined. Although a higher requirement may apply in certain situations. So it's important to understand that work requirements are not the same for everyone. DSS will be able to determine the appropriate participation requirement based on the individual's household circumstances. Temporary assistance applicants may be required to apply for other benefits they could be eligible to receive. For example, someone with a long-term disability may be required to apply for SSI. Depending on the person's circumstances, they may also need to apply for other benefits, such as Social Security, unemployment insurance, or veterans benefits. The idea is that temporary assistance typically requires individuals to pursue other benefits that may be available to them. Again, DSS will be able to determine which benefits an individual is required to apply for. Self-employment eligibility. Temporary assistance has specific rules for individuals who are self-employed. And when determining countable income, allowable business expenses are deducted from the income. Allowable business expenses are also deducted from the income the business earns. Self-employment may count toward the individual's work requirement. Typically, working 30 hours per week in the business can meet the participation requirement. After the business has been operating for about 3 years, DSS may then review whether it is financially viable. If the business is not producing enough income, the individual may be required to look for other employment. However, if the business does show potential for growth, DSS may allow additional time for it to develop. The local DSS will review the individual's specific situation and determine how the self-employment income and work activity are treated. Temporary assistance has an incentive that can allow certain earnings from an improved work or trading activity to be excluded when determining eligibility. If the individual meets the program requirements and the household's income is at or below 200% of the federal poverty level, those earnings may be completely disregarded. And this means the earnings are not counted when determining temporary assistance eligibility. There's no time limit on this disregard as long as the individual continues to meet the work requirements. There's also another work incentive available to certain individuals who are already receiving temporary assistance and then start a new job. So if the employment is verified by DSS and the household meets the income requirements, 100% of the earnings from the new job may be disregarded for up to 6 consecutive months. So this means those earnings are not considered when determining the temporary assistance benefit during that period. And an important part to remember here is that this particular work incentive is available only once during an individual's lifetime. Once the one-time 100% employment income disregard ends, or if the individual does not qualify for it, the regular earned income disregard may apply. And with this disregard, 63% of the person's monthly earned income is not counted. Then an additional $150 is deducted from the remaining earnings. And this allows a portion of the person's earnings to be excluded when determining continued temporary assistance eligibility and benefits. And the purpose here is to help individuals continue working while transitioning toward greater financial independence. Safety net assistance also has a work incentive called a plan of self-support. A local Department of Social Services may approve a plan for an individual who is working toward becoming more financially independent. And under an improved plan, certain earned income or resources may be excluded when determining safety net assistance eligibility. The plan can last for up to 1 year. And the goal is to give the individual an opportunity to use those earnings or resources toward becoming more self-supporting and reducing their need for ongoing assistance. Okay, I'm going to just pause for a moment because we covered a lot before we move into our temporary assistance case examples section. Just take a moment to confer with Jennifer to see if there's anything that may have come up in the chat that we need to visit.
I am not seeing anything in chat.
Okay.
I had a question. If you don't mind.
Sure, go ahead.
You talked about resource limits, income disregards, and that. I didn't know if I missed it, but is there while they're receiving SNAP, outside of what you just mentioned, how does income interact with that? So, like, if they do start working part-time, doesn't SNAP go up or down depending on their hours? Is there, or I mean, for not SNAP, for family
Temporary.
assistance? I've had trouble finding out like what income limits there are, or if it gets adjusted if they're working.
The family assistance. That would be, let me go back a few slides to see, just to
Because
jog
I
my
when I go
memory.
through like when I go to our like Erie County page on this,
Okay.
it it's also confusing because their page is like it starts off explaining family assistance and net assistance, but
Yep.
then when you go deeper to get answers on that, then all of a sudden it turns into they give you details for like emergency safety net assistance.
Yes.
The terminology starts changing, and I'm like, well, these don't seem like the same rules. You know what I mean? Do you know what I'm talking about?
I think I get what you're talking about, because there is, like I went over the, for the SNAP, you can get, the expedited
Yeah,
eligibility. Let me
because I was
see.
trying to figure out like if someone starts working, does their family assistance does it adjust to the income the way their SNAP benefits would, or does it stay at a certain rate as long as they're earning below a certain income amount? When trying to calculate what effect work would have on their current benefits, I was having trouble with.
Yeah. And yes, I see what you're saying. And that's a good question. I'm going to look into this further, because I was under the impression that it was within the percentage that they have, the
That's what I.
federal poverty level, and I believe it is, but I don't want to commit to that, just because I want to just double check
Sure.
before I officially say. I'll get back to you. And I
Okay.
can't see your name right now because of the
It's
chat. What,
Roger Brian.
Roger? Okay, so I can
Um,
get back to you and I can email you.
cool. Yeah, I did
Yeah,
see
thank you
because it
for
did
that.
direct me at one point. It says something like something or other follows like the federal
Yes.
TANF. Uh, but again, like on the Erie site, they start to like change the acronyms from time to time, and I'm like, are they trying? It's difficult
Yes.
to tell if they're talking about the exact same benefit or if they're like tricking me into thinking like, oh, it's just 138% poverty level, but oh no, wait, that's only for emergency or so. Yeah,
Yeah.
yeah. Any help you could find for me, that
Okay.
would be great.
I will. Thank you,
Thanks.
Roger. Yep. Okay. Jennifer, was there anything else?
I am not seeing any
Okay.
additional. But Roger, thanks for sharing that, because I know as we've all gone through this, we've encountered those same challenges. You're
Yes.
going through, you think you got it, and then you're like,
Hmm.
wait a minute.
Something
Yeah.
else comes
Oh,
up that,
actually,
yep.
well, before you go move on to the next section, I forgot I had one other quick one when for like those exemptions, uh, there were situations where like if you're getting SSI or if you have a disability for family assistance, you were exempt from like resources and income
Hmm.
issues. What type of, I guess, what level of disability are they considering? Like if someone like the only real documented thing in this one particular case I have is a learning disability, and I don't know if that's considered a qualifier or if they mean like a disability like they would for SSD, like at that level.
I believe it would have to be a qualifying disability under, I would say, I believe it would be under what Social Security determines a disability being.
Okay. I kind of suspected that. I figured I
Yes,
just,
again, I can look into that for sure, but I believe that's what it is, a qualifying disability under the disability requirements of Social Security.
okay. Um,
Can I just ask a quick follow-up, Roger?
Sure.
Which particular benefit type you're talking about? Family or safety net?
family assistance.
Family. Okay, thanks.
Yeah.
And this was regarding the sorry to clarify my question. It was the 60-month limit. With that part where it
60 month
mentioned that you would be exempt from that limit if you had like a qualifying disability.
qualifying disability.
And then
Okay.
I think I also, if someone was applying initially, um, how do they determine? How do you determine whether it's temporary assistance or emergency assistance? What are the rules there as far as who gets what? I found that a little confusing too when you're looking through like the application information and things like that as far as like what determines that if there's a single parent living with a child,
Yep.
there's family assistance, but in what situation do they qualify for emergency assistance?
So that
Like
was,
like again, like through the Erie site, you start looking through the benefits available, and they list family assistance first, and safety net assistance, and
yep.
then we're talking about work requirements, and then all of a sudden there's this emergency services, like there's homelessness and things like that. But then even so, when you go to eligibility on the eligibility page of the benefits, they start talking about emergency safety net assistance, and there's household size, and for eligibility, the 125% poverty guidelines, etc.
Hmm.
And then below that, there's emergency assistance to needy families with children. And I'm like, is that still family assistance, or is that a completely different benefit? Like the site starts to take these avenues where I'm like, are we still talking about the same thing, or are they throwing a new benefit out there with different rules? That part I start to get lost in.
Yes, there are so many different programs that do fall under both family assistance, the safety net assistance plan. And I can only really speak to the ones that um, I am familiar with. So I'm not.
Sure. It's sort
Trying
of
to.
I guess I think if you get, I think all of my questions will get answered if you're able to get me the income answer for
Yes.
family assistance, because that's really the
Hmm.
only thing I really need. Because all these other ones, these ones are a little more clear and they have different percentage
Yes.
poverty rates, but I just want to make sure that I'm given the right information and not following
Absolutely.
the wrong rules. So yeah,
Yes.
sorry to throw all these
Absolutely.
weird things, but the
No,
deeper I go
no.
into that
Thank
site,
you.
I'm like, someone needs to revise that because it's a bit of a maze.
Yes,
Erie County
it
site.
is for sure.
Okay, I'll let you move on. Thank you very
Okay.
much.
All right. Yes. Thank you. Okay. All right. So now we've covered the main assistance, temporary assistance rules. We're going to go ahead and put some of that information into practice. So we'll work through a few case examples to see how eligibility, work incentives, and changes in employment can affect temporary assistance benefits. In these examples, we'll be able to help show you how the rules we just discussed apply in real life situations. Okay, so let's start with Susan. Susan is a single parent with 2 children and currently receives $789 per month in family assistance with no other income. Susan starts a new job working 20 hours per week at $15 an hour, earning approximately $1,300 per month before taxes. She also pays $150 per month for childcare so she can work. Her employment has been approved as meeting her work participation requirements. So next, we're going to look at how her new earnings and the available work incentives may affect her family assistance benefit. Okay, so now let's apply what we just discussed to Susan's situation. So if you can take a moment to determine Susan's household net income for the needs test and whether her household meets the test. And as you work through the example, remember to consider whether any temporary assistance work incentives or income disregards apply before counting her earnings. And then we'll go through the calculations together on the next slide. But let me go back and just, you can take a look again at the scenario. And then the needs test, again, what is Susan's household net income for the needs test? And does the household meet the needs test? Okay, so go to the next slide and we can work through that calculation together. Okay, so the answer is $0 in net income for the needs test. And that's because Susan's employment meets the requirements for the training and work activity income disregard. So her earnings are fully disregarded for this test. And then since none of her earnings are counted, her net income for the needs test is $0. So we then compare the amount to her household's $789 standard of need. And because 0 is below the $789, Susan's household meets the needs test and remains financially eligible for family assistance. And then if anyone needs me to go back to the first slide again, just let me know.
Yeah, go on back.
To the scenario for Susan.
Okay, thanks.
Yep. Okay. Okay, so now that we know Susan meets the needs test, let's look at what happens to her family assistance payment once she begins working. So using the information from Susan's scenario, take just a moment to determine her net countable income and compare that to the household's standard of need and determine her family assistance payment. And then think about the bigger question here. Is Susan's household financially better off now that she is working? And we'll walk through the answers and compare her total household income before and after employment on the next slide. I just wanted to give everyone the opportunity to just kind of take a moment to look at it and consider for themselves first. And I'll go back to that. Oops. Okay, so because Susan's earnings are fully disregarded in this example, her countable net income is $0. So she will continue to receive the full $789 family assistance payment. Now, if we look at her overall financial picture, Susan has $1,300 in gross wages. plus her $789 family assistance benefit. And then after subtracting her $150 childcare expense, she has a total of $1,939 in total available monthly income. And so before Susan started working, the household had $789 per month. So in this example, Susan and her family are financially better off with her working. So this example was meant to show how temporary assistance, work incentives can help someone increase their overall household income as they are transitioning into employment. Again, I can just go back. This is just, and if you need me to go back a few more slides to the other numbers, I can do so. Okay, and then we have on the next slide, we can go through another scenario. So for this scenario, let's look at Susan's situation a little later in her employment. So in this scenario, her earnings no longer qualify for the training and work activity income disregard. And she has already used, say, her one-time 100% employment income disregard. Susan has now been working for more than 6 months. So we'll use the regular earned income disregard to determine how much of her earnings will count. And then next, we'll walk through that calculation and see how it affects her family assistance benefits.
Hey Denise, we did have a question about
sure.
how much is rent?
I'm sorry, how much is what?
Rent. The rent.
Let me see if I have that in there. Let me just see what slide I'm on, 81. I'm sorry if I'm just flipping through just to see. Okay, so this. Okay, so for this, let me see. This one I don't have the rent because, let me see here. Let me just move through it for a minute to see. Okay, so again, this scenario was just looking at her situation a little bit later in her employment. Okay. So for this one, I have her needs test to look at how Susan's situation changes when we apply the regular earned income disregard. So this one, if everyone can just take a moment to calculate how much of Susan's earnings will actually count after applying the disregard, and then compare her net countable income to the household standard of need to determine whether she still meets the needs test. And then on this next slide that I have, we can walk through that calculation together. Okay, so for this answer, Susan earns $1,300 per month. And under the regular earned income disregard, 63% of her earnings are disregarded. leaving 37% or $481 to be considered. So when we apply the additional 150 disregard, which brings Susan's countable income down to now $331 per month. Next, we're going to compare that $331 to the household's standard of need of $789. So since that $331 is less than the $789, Susan's household meets the needs test and remains financially eligible for family assistance. And next, on the next slide, we're going to see how this countable income affects the amount of her family assistance payment. Okay, so let's see. Okay. So now that we know Susan's countable income is $331 per month, let's determine how that affects her family assistance payment. So compare her countable income to the household standard of need of $789, and then calculate the remaining family assistance benefits. Then we're going to add her wages and benefits together. And then once we do that, we're going to subtract her childcare expenses and compare her total available income to what the household had before she started working. And then the final question is whether Susan's household is still financially better off while she is working. Okay, so here it is with the numbers showing you, maybe to make a little bit more sense. So here Susan's countable income is $331 per month. And then we're subtracting that from the household's $789 standard of need, which leaves a family assistance payment of $458 per month. Okay, so now let's look at Susan's overall income. She has $1,300 in gross wages, plus $458 in family assistance. And then after subtracting her $150 childcare expense, the household has $1,608 in available monthly income. So if you remember, before Susan started working, the household had $789 per month. So even though her family assistance payment has been decreased, the household is still financially better off with Susan working. This example is showing how the earned income disregard can help someone transition into employment while still continuing to receive some temporary assistance, even though her amount was decreased. But again, the family is still financially better off with Susan working. Okay, so does anyone need me to go or want to review anything of this Susan scenario?
How long does the income disregard last? Was it 6 months?
Yes.
Okay. And then at the end of that 6 months, what happens if their earnings stay the same?
So this, for Susan, let me look. And I'm just looking too, because I see the message still. Okay. And then I'm sorry, Roger. Oop. So what was, oops, did I get to the wrong one? Your question was what happens?
Yeah, how the disregard works. Just yeah, because I don't have it in front of me. I know you talked about it before, but how
I'll
long?
do that.
Because that only goes for like that disregard is only they're only eligible for that for like was it the first 6 months of work?
Yes.
And then what happens after that 6 months to their family assistance? Does it get terminated?
No, that after the first 6 months of family assistance, let me go back. I want to go back to my scenario with her. Oop. Okay. Let me see what I have. Sorry, my mouse got lost. Okay, so after that first 6 months, it would have been her earnings were counted under the regular HERS income disregard rule. So then at that point, after the 6 months end, the temporary assistance benefit would be recalculated. It would have been depending on her earnings. So depending on the earnings at that 6 month mark, the temporary assistance payment could decrease, which it did in this scenario, or it could end.
Okay.
So
So like
that,
if she was making more than
yes,
the 125% or whatever, yeah. Okay, it could end. Okay. Or okay.
yes, because I just wanted to go back and look at my scenario just to make sure I had the right notes for it. So for that 6 month, 100% that disregard, that since that's the once per lifetime
Mhm.
qualifying for, say, a new job, um, just wanted to point out, just to clarify that again, that wouldn't restart if someone, or in this example, Susan got a new job. That's a one time in a lifetime
Okay.
requirement. Or yes.
Okay.
Yeah. Okay. Yeah. So then after the 6 months, it would go back to regular temporary assistance. Earned income budgeting rules would then apply. Okay.
Okay. Thanks.
Yep.
Child.
Oh, was there another question? Okay, I'm gonna move on unless, is there another question? I can't tell if just someone's off mute, but I'll,
Liz is off mute. Yeah.
okay,
Yeah,
okay.
so
Oh,
don't involve me.
if everyone wants to just take a second look to see who's unmuted, I am unable to mute at this time. Okay. Oh. Okay. So an individual cannot receive SSI and temporary assistance for themselves at the same time. If a household member receives SSI, that person is excluded from the temporary assistance household, and their income and resources are not counted for temporary assistance. However, though, this does not mean the entire household is ineligible. Other eligible household members may still receive family assistance or safety net assistance if they meet the program requirements. And unlike SSI, Social Security Title II benefits such as SSDI, retirement, and survivor benefits are generally not counted income for temporary assistance. Depending on the amount received, these benefits may reduce the temporary assistance payment or make the household ineligible. And if the benefit is low enough, the household may still require temporary assistance. If a household member receives both SSI and a Title II benefit, that individual is excluded from that TA household. And their countable income is not counted when determining eligibility for any remaining household members. So now we'll just move on to a case study. So we have an example of this. And this example, we're going to be looking at how receiving SSI can affect a household's temporary assistance. So for this one, Charles, he's a widowed father with 3 children, and he's currently receiving family assistance for his household. He has no other income. Charles is then approved for SSI. And then remember from the previous slide that an individual cannot receive SSI and temporary assistance for themselves at the same time. So next we're going to look at what happens to the household's family assistance when Charles begins receiving SSI. Okay, so now that Charles has been approved for SSI, take a moment to just think about how this changes the household's family assistance. Remember, Charles can no longer be included in the temporary assistance household because he is now receiving SSI. And based on that change, how much family assistance will the remaining household receive? And what will be their total monthly income? And we're going to review the answers to that on the next slide. So again, I'll just go back really quick, take a look at this. His family assistance amount you see right here is $953.70 a month. And then he's approved for SSI, receiving $1054 per month. Okay, so once Charles begins receiving SSI, he's no longer included in the family assistance household. The family assistance benefit is then recalculated for his 3 children who do remain in that household. The children receive $789 per month in family assistance. And Charles is receiving his $1054 in his SSI payment. So together, the household has a total monthly income of $1843. So this example is meant to show that, how Charles's SSI is not counted as income when determining the family assistance benefit for the remaining household members. So again, I'll just go back to that first slide. First, the family was receiving $953.70 per month of family assistance. Once Charles was approved for SSI, he was approved for $1054 a month. So calculating again the new benefit amount his family receives is $789. Okay, so now let's see what happens when Charles starts working. So Charles earns, in this scenario, about $1,300 per month, which reduces his SSI benefit to $446.50 per month. So even though Charles is now working, he continues to receive SSI. And because he is still an SSI recipient, he remains excluded from the family assistance household. And his income, again, is not counted when determining the family assistance benefit for his 3 children. Charles also has $300 per month in childcare costs, which we'll consider when we look at the household's overall financial picture. Okay, so for this exercise, remember, Charles, again, he's still receiving SSI, so he's remaining excluded from that family assistance household. So think about whether his wages or SSI are counted when determining the family assistance eligibility of his children. And using what we've discussed, consider whether the household still meets the needs test, how much family assistance the children will receive, and the household's total monthly income after childcare costs. And we'll go through the answers on the next slide. Okay, so because Charles continues to receive SSI, he is remaining excluded from the temporary assistance household. This means Charles's SSI and wages are not counted when determining family assistance eligibility for the children. The household continues to meet the needs test with the child care allowance included. The family assistance payment is $10.89 per month. And then when we add Charles's wages, his remaining SSI benefit and the family assistance payment, then subtract the $300 a month in childcare costs. That leaves the household, or that puts the household at $2,535.50 available each month. So this example is just showing how employment can increase the household's overall income while the family is still continuing to receive other supports. And I know that that's a lot. I don't know if anybody wants me to just go over it once again, or if you want to see the few slides before. And then just as a reminder, these slides I will email them out so you'll have it to look, or maybe if you need to write on. But before I move on to the final section, is there any questions about the Charles scenario?
I'm not seeing any in chat. I don't know if anyone wants to unmute or not.
Okay. Okay. So in our final section, we're going to look at emergency assistance and the appeals process. We'll review situations that may qualify for emergency help and what individuals can do if they disagree with a temporary assistance decision. And this is important for benefits advisors because it helps us understand where to direct individuals when they have when they need immediate assistance or want to challenge a decision. Emergency assistance is designed to help individuals and families facing an urgent situation that may affect their health or safety. This can include situations such as homelessness, eviction, a utility shutoff, lack of heating, fuel, or domestic violence. And depending on the circumstances and eligibility requirements, assistance may be available for assistance such as back rent, utilities, heating fuel, or temporary housing. It's important to remember that eligibility and the type of assistance available depends on the individual's situation. So benefits advisors should refer individuals to their local Department of Social Services for an official determination. New York has several emergency assistance programs, and the program that applies depends on the individual's household situation and eligibility. Emergency assistance to adults, or EAA, generally serves individuals or couples receiving SSI or the state SSI supplement. Emergency assistance to families, or EAF, is for certain pregnant individuals and families with dependent children. And then emergency safety net assistance, or ESNA, may be available to single adults and couples without children. And again, a local Department of Social Services determines which programs applies and whether the household meets the eligibility requirements. So applying for emergency assistance, individuals can apply for emergency assistance online through their local Department of Social Services or by mail or fax using the appropriate application. The local Department of Social Services will review the household's circumstances and determine eligibility. Emergency situations are handled as quickly as possible to address any immediate needs. And benefits advisors should encourage individuals experiencing an urgent situation to clearly explain the emergency when applying and provide any requested documentation. An emergency can involve many different situations. For example, a household may have no food, no safe place to live, face eviction or a utility shutoff, or lack heating fuel during cold weather. The local Department of Social Services will evaluate the household circumstances to determine whether an immediate emergency exists and what assistance may be available. And these are examples. So individuals experiencing other situations that may threaten their health or safety should contact their local DSS. Temporary assistance eligibility continues to be reviewed after benefits are approved. Most family assistance and safety net assistance cases have a 12-month certification period within an eligibility questionnaire completed around the 6-month point. Households are also responsible for reporting changes that may affect their eligibility or benefit amount within 10 days. This can include changes in income, employment, household composition, housing costs, resources, or any other important circumstances. So benefits advisors just should remind individuals that temporary assistance has its own reporting requirements, which may be different from SNAP reporting requirements. And if an individual, and if an applicant or recipient disagrees with a temporary assistance decision, they do have the right to appeal by requesting a fair hearing. A fair hearing is a formal review of the decision by an independent hearing officer. In certain situations, the individual may also be able to request that benefits continue while they are waiting for the hearing. Another option is an agency conference, and this is an informal meeting with the local district to review the issue without a fair hearing. And requesting an agency conference does not take away the individual's right to request a fair hearing. So as we wrap up, remember that SNAP and temporary assistance are separate programs with different eligibility and reporting rules. Income, household circumstances, allowable deductions, and employment can all affect eligibility and benefit amounts. Work incentives may also help individuals transition to employment while continuing to receive some assistance. And as benefits advisors, our role is to simply help individuals understand these rules, encourage them to report required changes on time, and refer them to their local Department of Social Services for official eligibility and benefit determinations. Okay. These next few slides, I'll let you look through yourself when I email them out. They're just the resources that were used for this PowerPoint. A lot of the links to, there's the SNAP benefits fact sheets we have, OTDA, TANF state plan, temporary assistance website, and so on. Okay, that concludes today's presentation. I'll